Welcome back on the AM show. We'll be going to the Labadi Beach Hotel shortly, but right before we do, water is life. Awake is premium purified water treated through a strict purification process to ensure that every bottle on the market refreshes you better. And guess what? We have all the perfect sizes for you. 300 ml, 330 ml and 500 ml bottles, 750 ml as well, 1.5 liters for those who always want more. And for those who want some for maybe your homes or offices, you can look out for our 90-liter jar bottles, which are ideal for exactly those. All you must do now is drink Awake Purified Drinking Water wherever you go. So choose a bottle of Awake water and get quality hydration. Awake Purified Drinking Water, one for life. Always remember, for every bottle you purchase, an amount is donated to the National Cardiothoracic Center. It is another product of Casapreco Company Limited. For bulk purchases, just call this number, 0262 351 251. 0262 351 251. This advert is FDA approved. Well, let's connect now to the graphic business Stanbic Bank Breakfast Meeting. Today, all the talk is about the domestic debt exchange program and how we can shore up in these harsh economic times. It's taking place at the Labadi Beach Hotel, and my colleague Daryl Kwao is standing by. Daryl, if you can hear me, what's going on as of now at the Labadi Beach Hotel?
People have monies, and now they're confused about where to invest, especially if you're one of those who didn't participate in the domestic debt exchange program. We want to get into that. What are the implications? What are the lessons from this experience? And how is that affecting investments, our financial institutions, the government too as well? My name is Daryl Kwao. Happy to be with you this morning. Here with me, Eric Amponsa Boateng, who is a tax consultant, also with PKF Accra. Excited to have you as always, Mr. Amponsa Boateng. Also, Augustine Adongo, who is managing partner, Integrated Business Consultancy. He's also a business development strategist. I appreciate your time with us. Yeah, so I just want us to get right into it. How did we get here in the first place, Mr. Amponsa?
Good morning to your viewers and listeners. I think that we have gotten to the point where we are, primarily because of the fact that we did not manage our debt well. Okay, because for us to get to this point, when we now have to go to the IMF, first of all, we need to be able to sustain our debt. Mm-hmm. Okay, so if we are not able to do that, then it means that we may not get the facility that we need from the IMF. So basically what I'm saying is that we haven't managed our debts well. Because you see, as a government, there are basically two sources, okay, when it comes to the budget. One is to be able to raise the revenue internally, mm-hmm, or go in for the loans. Okay, so in trying to raise the revenue, that is where we have GRE coming into play. The other option is that you borrow from us, that is those of us within. That is why we are saying that it's what domestic. And normally government does that by issuing bonds. Also, you can also have the T-bills and other securities. So if, despite all these, government hasn't been able to manage the debts well, and we've come to the point that we are, I will say that we haven't done our work well. So that's what I'm saying.
And Mr. Adongo, for most people, the question is, why am I having to pay the price for government's inability to manage its debt? Why am I supposed to be the one having to suffer for it?
Thank you very much. I think we can look at that from two perspectives. Mm-hmm. The general public, that's the non-investing public, and the investing public. Let me start with the investing public. And let me say that we are part of the cause of the problem that we find ourselves in.
We are part of the problem?
Yes. I'm not talking of the government, the problem the government has caused,
okay,
but the problem that we now face, which has led you to ask the question.
How is that?
Because, yes, there may be some reasons, but we place all our bets in one basket. We put all our eggs in one basket. I know you can say we did not have alternatives as investors. The safest investment was what we went for. We didn't have alternatives, but there were near alternatives that we could have put our money into. But as a general observation, we tend to be very, very risk averse in this country.
Well, we're made to believe that government bonds are safe to invest in. At least it's one of the safest places to put your monies.
So who do you blame now? If you believed that story and now you've been caught out, what do you do? But the main principle about investment is don't put all your eggs in one basket.
You're telling me now.
I'm not telling you now. We've all known that. Most people who are in the investment community, most investors, this is a basic principle that they know. Don't put all your eggs in one basket. Why did we do that? Yes, as I said much earlier, we can say the alternatives were not as attractive as the government bonds or putting your money in government securities. But that does not mean that you should put 100%. We could perhaps have put 70%, 30% elsewhere.
Elsewhere, where?
Well, we'll come to that. Because that's
you
part.
agree, Mr. Officer?
Just to add to what he said, in fact, I agree with him, but probably to an extent, because just last year, towards the end of the year, I got some monies, and then I said to myself, do I put the money into the bonds, the T-bills, or probably change the money into foreign currency and keep them? And then a friend of mine told me that, Eric, change the money into either the USD and keep the money at home. At that time, the exchange rate was $1 to 14.5 Ghana cedis. Okay, so I changed just a few, okay, and then I put the rest of the money into the 91-day treasury bills. Okay, so, but then this morning I was talking to a friend. That money that I probably have at home now is no longer there. Mm-hmm. If a thief comes to me or breaks into my house and takes the money, I've lost everything. Okay, so I said to myself that yes, it would be better to place it in the T-bills, because at least you are sure, you are guaranteed that you are going to have your interest paid at the end of the 91 days. And even there, you have an option. Either you roll it or you only want the principal and all of that. So at least you have options. But we have come to where we are basically because of the fact that, like I've said earlier on, we haven't managed our debts well. Because if we had done so, I don't think that we would have gotten to where we are, where we now have to go to the IMF.
And the result that we have seen is that people have now lost faith in investment, especially in government bonds. People now have monies and they are thinking, what should I do with these monies? I'll come to your question about where else people can invest. But do you think that the problem is also how government managed this crisis, the communication that went before they started this debt exchange program, you know?
Darrell, we love spending a lot of time on problems in this country. We love analyzing programs till thy kingdom come. He's just talked about we know where we have come from. We know why we are where we are. Mm-hmm. I would like that we rather spend more time on how do we get out of this. Government has got its business to do. I'm not making any excuses for government. There's been, if you allow me to say, a complete failure of government. Mm-hmm. There's no doubt about that. What I'm interested in is the individual out there who is now sitting on money and doesn't know what to do with that money. Should he change it to foreign exchange and lose value as my brother here has just done? There are alternatives.
What would you advise?
What I would advise is, and this has to take some doing also, we need to work on this. There's a possibility of ensuring that the stock exchange really works and works very well. We can buy stocks. We can trade in shares. Yes, the stock exchange may not be performing as it should be. Yes, the private sector has a lot more work to do to inspire confidence in the investing public, to put monies into the real sector. That's part of the challenge we have in this country. We are not putting money into the real sector. I'm a business development strategist, so I'm the first to admit that we do have problems in the real sector. But these are problems that we can address. And by the way, anytime you have a challenge like this, the opportunities also jump at you. So now that we are faced with a huge challenge like this, I'm calling on my friends and colleagues in the business development industry to step up to the game. It is time for us to help the private sector, to help companies in the private sector, to put in place the right management systems, to put in place the right financing systems, and attract people like him. They don't have to put their monies under the pillow. They don't have to sit on their monies and say, what do we do with all this? You can invest in the real sector. Yes, select carefully, even the real sector where you invest your money. I tell you today, if you put your money into any service providing industry or company, you're not going to lose. People will always be sick, unfortunately. If we are able to develop the health sector in Ghana, it can attract investment and give us good returns.
So
that's just an example.
Clearly, we haven't explored the options.
Say that again?
I said we haven't explored the options.
We haven't explored them enough.
So it seems. And so, for example, how do we inspire confidence once again in the investing public, who some of whom right now are thinking maybe I should just get a safe and just lock up my money or put it under my pillow?
Okay, I think that government has to be transparent and also make what we call a full disclosure, so that if you want to invest, they should be able to tell you that these are the cards on the table, full disclosure. Because as we speak, you remember just about a few weeks ago, government was supposed to pay some people who had invested by the 13th or so, and government wasn't able to pay. And so when that happens, investors or Ghanaians will lose confidence in the economy. And when that happens, investors, unfortunately, may not want to put their monies or invest in the country.
Right.
Now, the other issue that has brought us where we are is our expenditure. Because you see, if every time your expenditure is more than your revenue, then it means that you have to borrow. And that is why there has been a call on the government to show the kind of commitment that we expect to cut down on its expenditure. Because if you do not do that, we can borrow so much, but if at the end of the day, our expenditure is more than how much we've been able to borrow, it will even be worse than what we have now. So I think that another key thing is how we have spent what we have been able to raise as a country.
What lessons are we learning as a country? Are we learning lessons at all? And that all of these is our debt crisis and how we have over time been unable to manage it. And every time we have to run to the IMF for a bailout. And now the exchange was part of the requirements for this bailout. How do we get out of this as a country?
Well, the lessons have been there for us to learn for a very long time. As the cliche goes, why do you keep repeating behavior and expect different results?
We have 30 seconds, I'm told.
Okay. So for me, is to reprioritize. What are our priorities? Let's focus on our priorities. We don't have enough time for me to go into what our priorities should be, but that's the first thing that we should do. Define our priorities well and focus on those priorities.
Great. Thank you so much, Augusta Dongo, Managing Partner, Integrated Business Consultancy, Accra, Erica Mponsa Boateng, Tax Consultant with PKF. Appreciate your time. It looks like it's going to be a very interesting discussion at the top of the hour. We are cutting to a break on the AM show. Winston Amma will take over at 8 when the graphic business Stanbic Bank Breakfast Meeting gets underway. Stay tuned.
2023. So in December 2022, we heard of the announcement, the Domestic Debt Exchange Program. Now, prior to the announcement, we had what had become a thorny issue, maybe a controversial one, mark-to-market. A lot of us asked questions about it and asked a simple question, why now? After all, we had always been investing and never heard anything about a mark-to-market value. And so today, you're told of what your value is and your mark-to-market value. But by the 5th of December, when we announced the Domestic Debt Exchange Program, it shook a lot of people. First of all, there were people who had been affected by the financial sector cleanup and felt the best way to invest was probably in mutual funds. Well, they were affected by the mark-to-market and said, why not try government bonds? After all, in their own belief, it's one of the closest things to a risk-free, as we have come to learn today. Initially spared, subsequently affected, that has become the situation of the Ghanaian investor. Today, many people have asked many questions. They've said, how safe are my investments? And where do I even invest? Where do I put my money? After all, we've all been advised not to be thinking about purchasing dollars. It only increases the demand for it, and it actually affects everything that we do. So this morning, we're having a very important conversation. The domestic debt exchange lessons and implications for how you invest. My name is Winston Amwa, and I'll be in charge of this ceremony. We'll start with an opening prayer. I do that myself, and I say, shall we pray? Heavenly Father, we're grateful to you for life. We're grateful to you for good health. Even as we begin this program, we commit this program into your hands. We pray that you shall begin with us, continue with us, and end with us. In Jesus' name we've prayed. Amen. Please, I can't hear the amen. Good, good, good. Shall we now welcome with a round of applause Mr. Boahene Asama, who is editor of Graphic Business, to give us the welcome address.
Thank you, Mr. Amwa. Good morning, distinguished ladies and gentlemen. I'm told that the MC will do the official introduction of dignitaries here, so I must get on with my speech and welcome address. As the foremost credible and most influential brand, Graphic Business has always set the agenda for the nation. We have provided our platform for national discourse over the past years, since the paper came into circulation. In 2014, however, the first ever Graphic Business Breakfast Meeting was held in Accra. This meeting brought together former finance ministers and the then sitting minister of finance. It was on the same topic. That is the state of the economy. Fast forward, here we are in 2023 talking about the state of the economy. This time around, there is a haircut. For those of you, and my MD says he already has a haircut already. He doesn't need one. We chose, and we have decided to provide this platform for this engagement because we chose to be part of the solution and not part of the problem. And in doing so, we want to enhance our democratic governance pillars in this. For some reason, it's been said that Ghana is an oasis of peace among the turbulent West African sub-region. It is not for nothing because of the peaceful nature we find ourselves in. And this forum is part of that process of deepening financial inclusion and also building the pillars upon which our democratic governance thrives. So, for us at Graphic Business, this is what we'll continue to do, to set the agenda for national discourse and also to provide expertise and experts who are here today to give us the insights into what is really our national challenge. Okay, so I heard my voice again. And we are fortunate to have our partner, Stanbic Bank, partners in this particular program. Mine is a short one, just to welcome you and not to talk plenty, so I will not take much of your time. It is our hope that this discourse will provide the answers to some of the nagging questions my brother Amwa was. And also, of course, chart the way forward on where we want to go as a nation. We, as graphic business, will continue to hold on to our credible platforms, and we want to partner businesses to move forward this economy. I've always said this, we're a business. If the economy goes down, we go down. Nobody's buying newspaper. If you're hungry, you don't buy newspaper. So our platforms will be used for the good of the economy, irrespective of what people will say. And we will not tread along the lines where others do tread. I mean, I'm sure most of you have heard the judgments of the High Courts last week, which puts into question the credibility of the work of journalists. But that is a subject matter for another day. Today, we are here to discuss the DEP and how all of us got a haircut. On this note, I wish to welcome you all to this gathering. Thank you very much.
Thank you very much, Boahene Samoa. You see, everybody has his own concerns. He says, if the economy is not doing well, you will not buy the graphic business or maybe the daily graphic. So for him, the economy must do well. And if the economy is not doing well also, we wouldn't have a lot of funds readily available to invest. Since this is a graphic business Stanbic Bank Breakfast Meeting, we'll take some opening remarks from the CEO and MD of Stanbic Bank and Graphic. We'll start with the MD of Graphic Communications Group, Ato Afo. Let's welcome him with a round of applause. Okay. So Ato tells me that he's waived his opportunity to speak. So we'd invite the CEO of Stanbic Bank Ghana, Kwamina Asumeni.
Thank you very much. I'm sure you're wondering which kind of Kwamina Asumeni is this? So my name is Kwabena Boama, and I'm the CEO for Stanbic Investment Management Services Limited. And this is the asset management arm of the bank. And I will do the introductory remark on behalf of Stanbic Bank. I believe one of the questions we've asked ourselves as investors and investment professionals is, how did we get here? And what happened? It's a question that we've all been talking about and discussing. And for us as investment professionals, I think one thing is very clear. We ask ourselves, did we educate our clients well enough for them to understand exactly what they were doing? And I guess most of us will say, maybe not well enough. So we are part of the issue. But the bigger question for us is, how do we get out of this? And it sends us back to the basics of things that were taught in school, the fundamentals of investments, and ensuring that our clients understand exactly what they are going into. We've always forgotten about the fact that risk is in everything that we do. In fact, if you choose not to go out of your house because of fear of an accident, even staying in your house is a risk. So every decision that we make as investors, there is some risk. But what level of risk is possible, or what level of risk can I take as an investor? And these are the things that we as investment professionals, we are learning to do and ensuring that every client that we engage, one, the understanding of risk is clear. And then two, the investment choices they are making, they are not only looking at returns, but also ensuring that their investment objectives, their liquidity needs are met in that decision that they are making. I believe that this morning's conversation will drum home the importance of these basic truths and hard truths that we have to learn as investment professionals and then also as investors. Thank you for coming, and I pray you have a wonderful conversation.
Thank you very much, Kobna. Of course, we'd have a wonderful conversation. And I like the bit about, the truth when it comes to investment. Because for many of us, when we're investing, sometimes we're giving guaranteed returns. So I look at it and I say, I have a guaranteed return. Every morning when I wake up, I check my investments and I know that, I am on course. And if I'm hit by such a news eventually, I ask myself, where did I go wrong? After all, you promised me guaranteed returns. When we were talking, you never told me about mark-to-market. So why all of a sudden a conversation about mark-to-market? We'll talk about all of these later on, but let's now introduce our chairperson for the occasion. And our chairperson is the first female managing director of the Ghana Stock Exchange, appointed by the Exchanges Council on November 24, 2022. Now, she joined the Exchange as Deputy Managing Director on August 1, 2020, and has been in the capital market industry for over 24 years and is highly respected for her technical knowledge, business acumen, outstanding professionalism, and integrity. Her experience covers market, stock. Ladies and gentlemen, let's welcome the MD of the Ghana Stock Exchange, Abnamwa, with a round of applause.
Thank you, Winston, my newfound brother, Mr. Amwa. Distinguished ladies and gentlemen, captains of industry, a very good morning to everyone. Good morning. Good morning. The cocoa is not going down very well this morning, I see. Thank you very much, management of Graphic Communications Group, Stanbic Bank, Ghana, and the organizers of this highly reputed thought leadership program in Ghana. It's been my dream to receive an invitation to attend this, and today it's come true. It's indeed an honor to chair and give my remarks on today's theme of the DDEP, lessons and implications for how you, or should I say, how we invest. Ladies and gentlemen, as you all know, government has recently concluded restructuring of a large part of its domestic debt. Or as Boahene said, the haircut has happened. And we are all busy dusting off our shaven hair and getting ready to admire ourselves in the mirror again. The financial and investment space has suffered some major knocks with regards to trust and confidence that it used to enjoy. We cannot gloss over its impact on investor confidence and what it means for investments and savings in future. Ladies and gentlemen, we cannot allow this crisis to go to waste. We need to see this as an opportunity to revise our economic models for a prosperous future. The DDEP, despite everything, has presented us with a silver lining, and that is the opportunity to reset our interest rate and investment returns regime to affordable and sustainable levels for all, governments, businesses, individuals, and investors. We must reset our interest rate regime and investment returns as well. Single-digit interest rates on government bonds or government securities, as prevails now, means that government debt service levels will fall. freeing up revenue that can be used for investment in critical social and economic infrastructure. It also means that the private sector has a chance of accessing affordable capital. And I see many captains here, and every time the cost of capital comes at the top of the challenges facing the sector. 2 weeks ago, I received a term sheet for a small overdraft facility we requested from one of our banks, not Stanbic Bank. But the interest rate quoted was 42.91%. 42.91%. I chuckled. The silver lining is here. We must grab the opportunity DDEP gives us for businesses to finance operations at much lower and sustainable levels. The single-digit interest rate regime on Treasury instruments also means that investors, you, I, our pensioners, our individual bondholders, the private sector, the pension funds, banks, asset managers, all of us, we must look for additional returns by investing in the private sector. We cannot fund our lifestyles by getting guaranteed risk-free returns from governments. Like every other country, it's investments in the private sector that gives that additional return we are all looking for. And by investing in the private sector, which is our real engine of growth and transformation of our economy, we will be meeting the objectives that we have set for ourselves. I say DDEP is a silver lining we must grab with both hands and fly with it. Distinguished guests, a few other lessons from DDEP for me. Transparency and accountability. It is critical that if we are going to rebuild trust and confidence in our economy, government, private institutions, to the large extent the individual, the taxpayer, we must conduct ourselves in a transparent and accountable manner to build trust with other stakeholders. Fiscal discipline. This is necessary for sustainable economic growth. Government must prioritize economic and social investments and must avoid using expensive debts to pay emoluments and service more debts. And the emoluments goes to 700,000 public servants. And today we spend more than 40% of revenues paying emoluments and the rest paying public debt. We need to spend where it matters most. Public-private partnerships, another area we must look at. This helps leverage resources and expertise of both public and private sectors for the benefits of the economy. Sustainable interest rate regime. I cannot stop calling this our silver lining that we must hold sacred and sustain. Ladies and gentlemen, a vibrant capital market is what we need for economic transformation. And I dare say the Ghana Stock Exchange provides such a platform to achieve this. Our three markets, the main market for equities, the alternative or growth market for SMEs, and the Ghana fixed income market for debt securities, facilitate the raising of capital by governments and businesses, and remains a viable platform for investors to seek reasonable returns. The exchange introduced our green, social, and sustainability-themed segment of the bond market last year to enable companies to list such products and for investors to trade in them. Our over-the-counter rules have been approved for investors to trade in unlisted public securities. And soon, we will launch our commercial paper market. Ghana, like every country that has transformed or seeks to transform itself, needs a vibrant capital market and stock exchange. And I want to encourage all unlisted companies to consider the use of any of our markets, or all of them, sooner rather than later, to achieve the economic and personal transformation we all yearn for. Finally, what are some of the things we need to think of as investors? Diversification. Kwabna raised this. All of us need to go back to the basics of investment by diversifying our portfolios to minimize risk and exposure. When the returns being offered is too good to be true, even when it's supposedly risk-free, think about it again. Businesses, consider financing with some equity too. The benefits far outweigh the fear of openness and accountability. Major countries and companies have developed because they brought in other equity partners. Seek professional advice. Many of us don't do that. As much as we'll send our cars to a mechanic or see the doctor or go to Dr. Google when we are not well, many of us do not reach out to the investment professionals. And we need to rethink our attitude towards the investment of our hard-earned income. Financial literacy, and it's a matter very, very close to the stock exchange's heart. It is worrying how low financial literacy is among both the educated and less educated, resulting in people falling for all kinds of Ponzi schemes. We need the support of regulators, market players, CSO, media, graphic business, and all stakeholders to embed financial literacy across this country, particularly starting with our schools. Last year, the stock exchange visited 37 tertiary and senior high schools with our financial literacy programs, including investment education tours, capital market quiz, stock pitch competition, together with our partners, the Young Investor Network, reaching over 5,000 students last year alone. We need to accelerate these initiatives. Digitalization. Adopting and accelerating digital technologies will speed up access to financial products and support financial inclusion. Market players need to collaborate more with fintechs to continue to develop digital portals that will make trading and investment and financial literacy easier and more convenient. GSE and our partners have launched tools like the GSE Market Watch portal, Trade Live, CD Manager, Second Stacks, to name a few, to improve such market access. In conclusion, ladies and gentlemen, rebuilding confidence and trust in the investment landscape requires a concerted effort from all of us. We must prioritize transparency, accountability, fiscal discipline, diversification, digitalization, and investment literacy. Considering investments, we must diversify our portfolios. At the stock exchange and working with the SEC, we are looking to bring more products to the market. We must stay updated about market information. By doing so, we create a sustainable and prosperous future for our country and for all of us. It is worth noting that markets change, issuers change, returns change, even governments may change, but the investing principles largely remain the same. Thank you for your attention, and let's get to work. I wish all of us here a successful deliberation. Thank you.
Thank you very, very much. Let's give you another round of applause. I like the conclusion. governments may change, lots of things may change, but the investment principles largely remain the same. So today we've learned that the DDEP, more like a silver lining, and it's now time for us to take advantage of it. Okay, we'll get into it shortly. Time now for our panel discussion, and I'll be introducing the panelists. Our first panelist is the former Chief Executive Officer of the National Pensions Regulatory Authority. Now, he was the acting Managing Director of Universal Merchant Bank during the bank's transitional period. He's also served as a board member and audit committee chairman for Universal Merchant Bank, and also served as the board chairman for All Terrain Services Limited, a hospitality company which operates in over 10 countries across Africa, Millennium Insurance Company Limited, and Appointed Time Screen Printing Company Limited. He's currently a non-executive director of Data Bank M Fund Limited, Casapreco Company Limited, and Ghana Deposit Protection Corporation. He's also an executive director of Discovery Limited, an insurance brokerage and consultancy firm. Now, his employment history spans across the financial services sector, that is pensions, insurance, banking, finance, and leasing, amongst others. Now, he, as a chartered accountant, trained with KPMG, and his formal education took him through the Manchester Business School for his Masters of Business Administration and the University of Bradford for his doctorate in Business Administration. He's a fellow of the Institute of Chartered Accountants Ghana, a member of the Chartered Institute of Taxation Ghana, and Chartered Insurance Institute Ghana. Let's welcome Dr. Daniel Settle with a round of applause. Our next panelist is an associate professor of economics at the Department of Economics of the University of Ghana, where he's been lecturing since May 2000. He's also an external member of the Monetary Policy Committee of the Central Bank of Ghana, in charge of taking decisions on the monetary policy directions for Ghana. He holds a PhD in economics from the Nottingham School of Economics, University of Nottingham in the UK. Prior to that, he attended the prestigious Harvard University as a special student of the Distinguished Department of Economics for his PhD coursework. He obtained his Master of Philosophy in Economics and Bachelor of Arts in Economics and Sociology degrees from Ghana's premier university, the University of Ghana. He's a development economist with research interest in the following areas: international trade, macroeconomic policy, small enterprises development, international trade policy, financial and monetary economics, international macroeconomics, and applied econometrics. Recently, he's taking a keen interest in natural resource economics, especially in exploring the environmental impact of macroeconomic policies, especially trade and trade policies. Let's welcome Professor Ebo Texan. And our final panelist is currently the Director General of the Securities and Exchange Commission, Ghana, and Chairman of the Ghana Investments and Securities Institute. He's also a member of the Executive Council of the West Africa Securities Regulatory Association, and he also serves as a member of the National Pensions Regulatory Authority and the Financial Stability Advisory Council in Ghana. Now, his working experience has revolved around lecturing and investment banking. He spent over 20 years in investment banking with Data Bank Group, where he played various roles, including head of asset management and head of research. Now, he lectured briefly in marketing at the University of Ghana Business School from 1996 to 1998, and also a facilitator in a case study in corporate finance class at Harvard Business School in 2008. He holds a BSc Administration Management option with first-class honors and an MBA Marketing from the University of Ghana. He also has a postgraduate diploma in corporate finance and management from the Sorbonne University in Paris, and a PhD in systematic theology and organizational leadership from the Northwestern Christian University, and an honorary doctorate in management and Christian leadership from the International Christian University. Let's welcome Reverend Dr. Daniel Obamitete. Great, so all our panelists are set now. What that means is that we can begin the conversation on the domestic debt exchange lessons and implications for how you should invest, okay? Let me just get the microphones to our panelists. while I try to... Okay, so let me just get the microphone to our panelists. We'll do that shortly, and then we'll start the conversation on the lessons. Wow, this is steep. On the lessons that you can learn. Thank you very much. Thank you. I think you can have mine. Great. So let's start off with you. I'll start with you, Professor Ebo Texan. And before we get into everything about investment on all, just by way of talking about the triggers of the domestic debt exchange program, what really got us into the debt exchange program?
Thank you, Winston. And I want to express my appreciation to Graphic for inviting me to be part of this discussion. I've followed closely what has been going on here over the past year, and so it's a privilege to be here to share my thoughts on the DDEP. If you ask me what triggered the whole of this debt restructuring, it's because Ghana has been very, very inefficient in managing our public finances. And over the years, especially after we went into democratic rule, we've had a situation where we have, over the years, been running huge fiscal deficits. And that has meant that we borrow to finance that gap. And over the years, especially in the 2000s, when the political climate has been more of trying to use fiscal populism to win elections, we've had the various governments pursue party agenda different from the national development agenda, and more often than not have committed our resources to funding those special programs that the parties have promised their electorates. Now, at the same time, in some of the years, we've not mobilized enough revenue. So with fiscal populism and all of the development needs that we have, we've run huge fiscal deficits, especially in election years. And so we borrowed over the years. You remember in 2000, the year 2000, our debt to GDP ratio was 185% of our GDP. And when President Kufuor took over the first 6 years, we tried as much as possible to have access to the HIPIC initiative, which we did. And by 2006, our debt to GDP ratio had dropped to 26%.
Sure.
Now, over the years from 2006 to 2020, in just 14 years, we have consistently been borrowing, especially when we got access to the ICM. Although for some reason, politicians thought that was free money that was coming in. But when you get onto the ICM, it comes with some good resources, but if you don't clean up the mess in the economy, that market will punish you. And what we witnessed in middle part of 2021 to 2022 was as a result of that. Because the way the money flies in, the money will fly out if investors are not too confident in the economy. And if you look at ever since COVID hit, we've had a situation where we've not kept to our fiscal consolidation efforts. And therefore, once our debt to GDP ratio went above 70%, investors began to get concerned about our ability to repay. And if you remember what happened when the 2022 budget was presented with the e-levy and the debate that went on in Parliament, don't forget that the e-levy was supposed to rake in almost 7 billion, which was going to be about 6.5% of the revenue that we were going to collect in that year. So once Parliament was struggling to pass that, it gave a clear signal to investors that Ghana was not going to be able to meet its fiscal consolidation efforts. And then the credit agencies came in, downgraded us, and the trigger started. Remember, at that time, we had said we were not going to IMF.
Yeah.
But when the non-resident investors started taking out their investment in domestic bonds, and our currency was depreciating very fast. Oil prices were going up. The central bank's reserves were drying up. It became clear that we needed to go to the IMF. And this debt restructuring is part of the sort of issues that we need to tackle as in furtherance of getting that support from the IMF.
Great. Now, you talked about fiscal populism. You've talked about how we've not been very careful with expenditure and all. We've been to the IMF 17 times. Some would argue it doesn't look like it's going to stop anytime soon. So if I'm looking at the current situation, how sure am I that we're not going to get into it again? And so how safe would my investments be going forward?
Winston, you don't have to worry about the safety of your investments. We don't have a lot of investment assets in Ghana. No matter what, if you want to invest, treasury bill, bonds will be one of the alternatives that you need to take a look at, apart from investing in equity in any of our public, our private enterprises. But, I mean, imagine market economies that are very unstable, that pile up their debts. We'll normally go through some of these sovereign debt defaults. And so, as much as I don't foresee the occurrence of what has happened in 2022 up to now happening anytime soon, if you're able to clear the mess, bring down our debt service, and begin to put in place measures to increase our domestic resource mobilization, I don't think that we should see a default from the government again. This is not to say that it won't happen if we begin to do the same things we've been doing in the past. And there are a lot of initiatives that Ghana has to embark on, and we need to have a fiscal council that has some power to bite, not just advising the government, but to be giving that mandate to ensure that the managers of the economy commit to the fiscal responsibility rules that we've put in place, so that if our fiscal deficit drops to about 3%, which is the average that we are looking for within the sub-region, I think that Ghana shouldn't get to this point anytime soon. As for whether the IMF will return to Ghana or not, I mean, when we were living in 2019, we thought that it was going to take some time for them to come back, only for them to be coming back in less than 4 years. So I cannot predict whether they're going to come back or not, but we shouldn't take it for granted that we'll never do anything about our situation. I think that what should be clear to Ghanaians is that no single government within a period of 8 years will be able to develop Ghana. It's not going to happen. It has to be consistent, and governments after government need to commit to a national development plan that has been put in place and it has been accepted nationally to be the blueprint for our development. And every government that comes in will come and actualize our yearly budgets to be meeting those development plans. And this is going to take us more than 2 decades for us to see any meaningful development. But if we put pressure on them to deliver within 4 years, they'll go the way of the fiscal populism, and that is the problem that we have. Some of the initiatives are just wasteful. Some of them are not prioritized well. We don't need them now. We don't have the resources to do them. But because it's a promise that has been made, and if you look at even the 2020 elections, the competition between the major parties were what they had been able to achieve in their manifestos and not what they've been able to do for Ghana based on our national development plans. And when you hear some of these discussions, then it becomes worrying that if we don't take care, our parties will set our economy to levels that we will not expect to happen. So we need to do something about it.
Well, thank you very much, Professor Texton. But, as we wrap up, you get me a little bit scared. But I'll come back to you because I need to move to Reverend Dr. Ugbami Tete. Maybe he can, get us onto the path of investing some more because, all the things we talk about, very true, are the things we do. And one of the things we've become very used to. So just this morning, someone told me that don't just talk about the problems, talk about the solutions. I'll come back to you, we'll talk about the solutions. Okay. Because all the things that you've identified, some of the programs and projects that may not help us. But Reverend Ugbami Tete, let me just find out from you. I mean, a lot of people are asking themselves this very simple question. Today, why is it necessary? Why should I even think of investing or investment based on all that has been happening in the country?
Yeah, thank you.
Okay, I think you can have mine.
Okay, thank you, Winston, for that. I will start by maybe just trying to touch a little bit on the previous question and in relation to investment. And that's to say that I think the DDE, for me, one of the lessons is the fact that the macroeconomic environment can and does impact on investments. And we need to have that understanding that, you know, what is happening within the macroeconomic environment can impact investments. There are some shocks that can come. Some may be self-inflicted, some may be external. But either way, I think the cardinal point is that what happens within the broad macroeconomic environment will impact on investments. So the question is, how do you understand the shocks? Are there some things you can do? Because I hear a lot of talk, safety, safety, safety. But the question is, there are risks out there, and I think the MD of Stanbic Investments Limited and then our chairperson alluded to the fact that there's always an element of risk. So the question comes down to, how do you position yourself to protect or minimize the impact of the risk on your investment? So to answer your question, investment is something that I believe that we all need to do because it is forward-looking. So maybe let me distinguish between savings and investment. So savings is a part of your income that you do not consume. Okay, but if you do nothing about your savings, the forces in the macroeconomic environment, like inflation or depreciation of the currency, can reduce the value of your savings. So one of the prudent responses is to put your savings to work. And that is what investment is all about, to not just not spending all the income as in saving a bit, but putting the savings to work. But in putting the savings to work, you need to recognize that there will be some degree of risk, and a lot of it may come from the macroeconomic environment. And that's where the issue of understanding the investment landscape is all about, so that you can make informed decisions about how to invest, knowing that there could be this risk and that risk. There's a continuum. When you talk about risk, there's low risk, there's moderate risk, and then there's high risk. I think a problem is people do not understand or appreciate the fact of the risk, and all they look for is, where can I get the best returns? So you have people chasing returns without recognizing that there will always be an element of risk when you're putting your savings to work. So I think it's about how we improve financial literacy, how we get people to understand and appreciate how investment should be done, get people to understand that when you are selecting a particular asset class, inform yourself about the potential risk and ask yourself, what can I do to mitigate the risk associated? But I wouldn't say that because there's a problem, then do not invest. It's just like if you get into an accident, that doesn't mean that you'll never drive or never go out.
That problem could affect your investment. And look, I mean, I'll say this. One of the reasons why I wasn't affected by mark-to-market was that consistently, every week, at the end of every week, I check my investments. Then I realized that the percentage that I was guaranteed or I was told I would be earning, which has been advertised on the company's website, is not what I was getting. So I took my money. At the time, I was thinking of going to buy bonds. And while I was getting ready to go and buy bonds, I heard there could be a haircut. I held on, waiting to invest in treasury bills. Then when I read the debt exchange, the amended one that said, treasury bills are not affected, but could be affected in... Then I paused again. And I asked myself, so what do I do? And that's the reality many Ghanaians find themselves in. You know, while we'll be telling, the reality today is that, where do I go from here?
So let me give you an example of what I'm talking about being informed in the investment decisions you make. There's something called concentration risk, okay? And that's where you pack or put all your investment in one particular instrument. You know, the other speakers talked about diversification, and that's looking at it from the other side. But what people don't know is that they fall to this concentration risk because they convince themselves that this area is totally risk-free, the returns are good, and then therefore I must go in, you know, everything. You must be aware that there's the element of concentration risk. You were saying that you managed to move, but assuming you didn't move, you'd have been caught in that concentration risk. So what people should do is to diversify their investment. No matter how good a particular asset class may appear to be, you need to remember that if you concentrate all your investment in that particular asset class, you're open to anything that can go wrong, because you know there's this principle that no matter how well you plan, something can go wrong. One of the things I had said earlier on is that we, as in the investment professionals, need to revisit the way they even sell fixed income products so that people get a better understanding. So I think it really boils down, like again the previous speaker said, going back to the basics of investment and to understand that there is always an element of risk, okay, with every investment asset class. So the question is, how are you minimizing the risk? Because once you are investing, you're putting your savings to work. When you, for instance, decide to invest in your own business, maybe some commercial business or whatever, you're taking some risk. When you invest in financial assets, you're also taking some risk. The question is, what degree of risk are you taking, and how do you structure your investment in such a way that you minimize the risk? Now, if, for instance, you keep part of your savings in pure savings, you put part in different asset classes, it's not likely that all the different asset classes would be impacted negatively, okay? And that's why the principle of diversification it's still a very important rule when it comes to investing. So my answer is that investing still pays. It is a way to, if you like, buy the future in terms of preparing or trying to, assure a certain kind of, income flow in the future. However, you must know that there is risk. So the question is, how are you structuring your investment to minimize the potential risk? Remember I said earlier on that if we take the macroeconomic environment that impacts on investment, there can be some that are external, or some of the shocks are such that it's it's outside the control of, let's say, even those in charge of the economic management of the economy. So there are some shocks that will come. There are some shocks that are self-inflicted, like Prof said. But the question is, you, the investor, you accept that investment is good. It's a sure way to grow your savings, to ensure that your savings are not eroded by inflation and so on and so forth. But how do you structure your investment so that you minimize the risk? I think that really is the issue.
Okay, we'll look at structuring of investment so you minimize the risk. But let me get to Dr. Daniel Sedo and find his view on a very important issue, because there are persons who are affected by the financial sector cleanup. And so for these persons, they look back, and in convincing them, you tell them, oh, you have to diversify. They tell you, but I did, and I was still hit. So for that person who's being affected multiple times amidst diversification, how do we convince that person Now is the time.
Hello. Thank you very much for the question. I believe it has to do with trust. And we need to appreciate the fact that we are a developing country. And not many of us are well educated. Not many of us understand the financial issues. Now, when you find yourself in this kind of situation, you want to address the trusting behaviors. And the very first one is, I have to rely on somebody. So I need to rely on the financial market players. Just like when I'm sick, I go to the doctor and I want to believe that the doctor will give me the best of care. And my understanding is that the doctor should know more than I do. So that's the first line. And we need to get the people who play in that space to appreciate this fact and not be opportunistic behaviors. Number two is we have something of value, which is at risk. That is why we are engaging the people in the financial services sector. Now, if we don't have anything of value, we will not even talk to them. There is something that matters to us, and we are concerned about it. We want to get it protected. We want to get it to appreciate. That is why we engage them. And again, they don't have to abuse that. Number three is we know that we have goals. We have aspirations. We know we'll get to a point the strength to work will no longer be there, and we want to rely on our investment. We know we have children who must go to school, so we are saving money towards people going to school. So we need to engage these players to appreciate these things. Now, what you see very often is when these players put emphasis on themselves instead of the customer, then we start getting the problem. So of these three things I mentioned, the bottom of it all is that me as an investor, my success depends on the quality of decision the financial players make. And our problem is the quality of the decisions we make.
Okay.
I'll give you a very little one. I didn't know Mr. Buama before. I just saw him here. Now, some few months back, I engaged him on phone, and I wanted to invest. And I told him government would default. He said no. We argued. And I said, perhaps you know something I don't know. Government will default. What happened? He is the person I'm relying on. And I've heard people say we must make informed decision. But where is the information to make that informed decision? Now, if you go on the website of this financial institution, skeletal information, at least I have some bit of education. I try to look at the numbers. You don't get enough details. If you pick the banks, just oppose them, the words they use to describe various things differ. It's not standardized. So how do I make that analysis? So we have a problem of behavior or character that we must seek to be talking about. If we can address that, nobody is saying there'll be no risk. Nobody is saying that. And nobody is saying that we do not appreciate the fact that there are trust mechanisms built into our society. Now, for instance, if you take the banks, you are asked to reserve something with the central bank. That is the primary reserve. You have your statutory reserves. Additionally, you are asked to buy insurance. That is the deposit protection insurance, which they pay for. Those are mechanisms to engender confidence. Fantastic. Similarly, if you take the insurance companies, they have what they call the rescue fund. They have the mechanism of leveraging on other institutions, that is reinsurance. So if there's a claim, they can readily take money from various places to pay your claims. Now, if you take pensions, it has an interesting structure where they introduce trustees and introduce custodians. So trustees don't see the money. The money is run through custodians just to protect it. But when you ask yourself the critical questions, are they following the mechanism we put in place? The answer is no. So we make it so easy for the system to fail. And what has happened to us is our own making. I mean, we can talk about all kinds of excuses. And nobody is saying that with the best of intention, there wouldn't be failure. It's possible. And that's why we put in the mechanism. But when we set out to do what is wrong, look, it's certain that we will fail. And so what has happened to us is our own making. If you want me to trust you, which I need to, then we need to start putting up the best of behaviors.
I put my trust in the analyst, the expert, and he tells me, oh, let's do this. And you, at the time, knew government was going to default, argued government was going to default, but the person who was convincing you said government was not going to default. I'm sure the question the man listening to us right now is asking is, so how do I trust that expert who's supposed to help me make the right decisions?
There are two things. We need to get ourselves properly informed and properly educated. Reverend talked about the macroeconomic environment. We need to make our students of the development. Prof talked about the political issues. We need to find a way to start correcting that. Look, there's no way we will move away from the financial system. They are part of us. Investment we will continue to do. The elephant in the room is inflation. How do we bring it down? How do we get people to behave properly? How do we, when we mobilize resources, how do we put it in the best of investment? The MD of the Stock Exchange talk about investing properly. How do we identify those projects that will serve us well so that our resources we channel? Look, we just need to prop ourselves and be one another's keeper and serve as a check on one another and demand that we do things properly. If we start doing things properly, yes, we'll be on course. If we start disclosing information, even on the stock exchange, how many of the people listed on the stock exchange, I'm talking of the entity, disclose enough information that independently you can do the analysis? I used to work elsewhere in my previous life. The company was listed. I have a shareholder from South Africa who will call and will spend about 1 hour with me asking all manner of questions. How many of our people here has the ability to ask those questions? Not many. But unfortunately, that's what we are rather abusing, and that's what is creating the problem. So my point is that let us all start behaving properly, because we are all hurting. Even if you leave your money in the bank, you are not even sure. Look, I'll tell you my own experience. 2019, they said KYC. I should bring the biodata page of my passport. I did. 2 weeks after, somebody went, forged my signature, took all the money, 2 accounts, and closed the account. The bank in this country. I went to the MD and I said, I won't take this from you. We got it sorted out. About 3 months ago, a niece of mine, one of the big banks in this country, she was outside. Somebody went into her account, transferred money to a certain mobile phone, 30,000. The case is still running. I have even run it with the supervisors. The banking supervisors is still hanging. I give you another case. I ran an insurance brokerage. So we should not limit the issues to bank and securities. Now, my best client, I did a policy for them. We dotted the I's, we crossed the T's. There was a claim. We went to the insurance company. They wouldn't pay. I ran to the regulator. They called us. There was a ruling in our favor. The regulator says pay. They won't pay. Then I went back to the commissioner and I said, what's happening? In my presence, he called the MD of that insurance company and said, you must pay by Friday. That was last year. Even as I speak today, they haven't paid. Issues of trust. The issues are real. And we need to develop our financial services sector. So we must start behaving properly.
Well, now that we have Reverend Ogbamitete, and you've raised a lot of issues about information and all, maybe you would take time to address some of these concerns that Dr. Sedos raised. Reverend Ogbamitete.
Yeah, thank you, Winston. I think actually one of the points I had written was in my notes is the importance of information in the development of the market, in eliciting more confidence in investors. The Ghana Stock Exchange has disclosures for the various issuers that have listed securities on their on the platform. The question, which I think Dr. Sedo alluded to, is whether people are able to interrogate, especially the issuers, to get more answers to questions. I think it still goes back to the level of, if you like, financial awareness, or people tend to rely more on what the other person would say, this is good, put your money in, rather than trying to understand issues and then raise questions. So there is some provision for information. I think there's still more room. So for instance, at the SEC, we are working on a certain project to create a certain database that investors can tap in and get more information about the listed companies and other investment schemes within the system. It's a project that is ongoing. We did something which, if you go to our website, for instance, we have what we call a color coding scheme, which will, for instance, indicate to you that maybe this particular fund manager has some regulatory issue to resolve, so that if you have to deal with that particular entity, you can ask some questions. Why do you have this particular color code on the SEC side? What are you doing about it? So I think we are working on improving the access to information, because information really is what drives behavior. And let me slip this in, and I think for your people, Winston, the media, I would say that it's also important the kind of information you put out on the financial market. Sometimes it's a bit, what word would I use, a bit sensational, and that can trigger a certain reaction, because people rely on what they hear, and then it elicits a certain kind of response. I've had cause to raise issues about some of the reporting that has been done. But I totally agree that information is critical. The market operators must put out more information. We, the regulator, we are working on also creating access to more information that would enable people to make informed decisions. I think that we need to build the culture of people asking questions and getting answers, rather than just relying on the say-so of this person or that person, whether it's a relative or whatever it is. Let's interrogate issues more. I think we may not be up there, but we can still encourage that. And I think some of the initiatives of trying to create some awareness in the schools, the universities, it's all part of getting people to become more comfortable with these issues so that they can ask questions. So some information is available, and people need to access them, and then also ask questions so that they can make the kind of decision. But I would strongly say that people must also learn to own their decisions. One of the things we say is that if you're a financial advisor, you're not to make decisions for the investor. You should let the investor, because otherwise you can use your own, let's say, risk profile. You may have a certain appetite for this or that, and you can use that, but you must guide the investor, let him understand the trade-off, the characteristics of the different investment products, so that they can own the decision. I know maybe we may not be there, but that is where we must be headed.
Should I give you feedback?
Yes.
Now, anytime I've been engaged by a financial analyst or advisor, they have always done everything possible to get you to invest. In fact, he or she does everything possible. So by the time you're done, you're giving him or her your money. It's not like, opening everything to you for you to make a decision. Even when they're done talking to you, they call you tomorrow and say, have you made up your mind now? Should I bring the form so that you feel? And I'm sure a lot of people would testify. So we don't even have it. It's like you're being compelled, to make a decision. So maybe that's something you should even pick, because that's how we feel all the time when these advisors and analysts engage us.
I think maybe those are, they are purely marketing their product, and maybe they are leaving the aspect of helping you, the investor, to make a choice, because otherwise they should really let you understand all the options, but they may just sell you their product. So I would say it's something that needs to be worked on in terms of the market operators, the investment advisors, or the marketing reps of the fund managers, to make sure that they provide, if you like, a balanced view. But on top of that, as a regulator, and indeed the MD of the Ghana Stock Exchange made that point, we must be able to do a lot broader financial education, so that even though the marketing rep or investment advisor of that particular fund manager is giving you pressure and trying to just sell a product, say, to get you to sign on the dotted line, if you have a certain broader understanding, you may ask some questions, and then you can know whether you are just being railroaded into a particular product or not. So I would agree that we need to do more in terms of financial literacy across board, so that people can ask questions. I think one of the problems, people don't ask questions. They just take it that once this person works with this reputable company, whatever they say is gospel. But I think that there is a place of asking questions. What can go wrong? What is the downside? Et cetera, et cetera. So it all comes down to, how we get people to be more informed and to own the decision. I think that people must get to the point where they own the decision. Otherwise, you always be pointing your hand, oh, this person led me to this. But I think that it's your own money, it's your future you want to invest for, so you must own it, and you must ask questions, you must be comfortable. One of the lessons I picked from Warren Buffett, he said he will never invest in something he doesn't understand. Okay, so I think owning it means that just as much as you can, but I totally agree that we need to step up financial literacy so that people can be more empowered to interrogate the investment advisors and then the financial information that's put out by various issuers and fund management companies.
All right, so this is the Graphic Business Stanbic Bank Breakfast Meeting, and the theme for today's meeting is on the Domestic Debt Exchange Program, lessons and implication on how you invest. I'll get to you, Professor Texan, because you've talked about, we deal with the macroeconomic situation, but before we do that, having listened to Reverend Dr. Bamitete, Dr. Dan Sedo, I'm sure people are asking the final question when it comes to this. What should be their posture or attitude towards investment?
You've heard the experts talk about what you need to do. We should go on to invest. If we want our economy to develop, if we want Ghana to develop, we should expect that the resources that are needed for the development of our economy will come from within. So like Reverend said, if we save, let us transform our savings into investment. The private sector gets hold of those resources. They can create jobs, they get jobs to do, they expand the productive base of the economy, and then Ghana becomes better. So as for investment, we should go on to invest. And like they've said, you need to diversify your investment. You don't need to put all your eggs into one basket. It's very important. But the depth of knowledge that individuals require is well above the literacy level of most people who invest. So there's a need for enough education, even in the local dialects, for the pensioner who has just retired and is looking for ways to invest his or her pension funds and get some fixed income until the Lord comes to call him or her. So we need to educate. I've had a lot of education to do myself, even for some of my colleagues who are very well educated, asking a lot of questions about what they should be doing and what they shouldn't do. So definitely we need to adopt that attitude that yes, we'll go on. We should make it possible for government to mobilize majority of its resources from within and not from outside, because it comes with a lot of other disruptions when things don't go on well. Imagine if most people who held the domestic bonds were domestic residents. We would not have had the sharp depreciation that took place over the last year, because most of the non-residents were taking their investment out. That would have stabilized our currency a bit. So it wouldn't have had its impact on inflation and all of that. Then also the fact that, like Reverend said, you've had an accident before doesn't mean you don't have to go out. I have confidence in the fact that we shouldn't expect any of this to happen anytime soon if you're able to clean up this mess well. I must admit that the whole DDE program has really dented the confidence of most uninformed investors. I'll tell you, I mean, a woman told me that, why are they telling her that government will not pay? She didn't give her money to government. She walked into the bank to buy a treasury bill. She thought that a treasury bill was being sold by the bank. So far as she's concerned, she's taking her money from the bank. She didn't give her money to government. So that's where the financial literacy should come in. When they walk into the banks to buy the treasury bills, the bonds, the officials of the bank need to explain to them that we are just an intermediary. So the money you are giving us is going to the government for them to understand. So there's a lot of education that needs to go on. But what is important is that we need to drum home the fact that we have to continue to invest. Pension funds will always get pension obligations that are deducted and sent to them. They'll have to invest it. They'll have to hold government bonds. I mean, and all of that. But I think that there's also the opportunity time for the Ghana Stock Exchange to also begin to let people know that as an alternative, you can also buy equity in domestic firms that are doing well. Okay. We need to see how best we can get some of our firms that are doing well to go through the processes of enlisting on the Ghana Stock Exchange.
Okay.
Those are long-term investments that could also pay you well, if you invest in the right company. And so it's also a blessing that this has happened, that people now become aware that, there are other ways in which we could invest our resources, and the education should go on. But I'll say that, yes, your attitude is, we are still going to invest. We are not going to change our attitude towards investment. Yes.
Talking about pension funds and all, I mean, Dr. Sedo, you had a presentation somewhere last month, and you had a lot of proposals on how we can even use these funds, which you believe would go a long way in increasing even confidence, investor confidence. Please share some of them with us.
Okay, thank you very much. I'll do some quick reaction and then link it up. Now, people must understand what they are doing. That's true. But we must agree that we are a developing country. We are not there yet. And so we must show a lot of empathy when we find ourselves in responsible position. Number two, we must look at our regulatory architecture. And our regulators must start taking responsibility. Now, if you take pensions, there's regular money coming. Indeed, pension is bigger than oil. Seriously. The biggest enemy of pension is inflation. Inflation is over 50%. Then you direct people to channel the revenue, the resources they mobilize to government. And so you have over 80% of pension resources being with government. Pension is long-term fund, and you are giving it to government for recurrent expenditure. Look, you are certainly setting up ourselves to fail. How much is government even paying? And if you look at it critically, the return on investment, therefore, is negative. And when the guy goes on pension, he can't enjoy his life. So as educated people, we need to be interrogating these things and say, how do we dismantle and rebuild this economy? Reverend talked about the larger economy. Yes, that's where the problem is coming from. I often ask myself, what is government doing with money? And we need to be real. If government is putting money in productive ventures, Prof said it earlier, then we would not be worried. We will be generating employment. But can we say, let's develop a proper capital market? Not the ones we have. We have something, but that is not. And you have a proper market with integrity, with right-thinking people, people who are not there to abuse ignorant people. So we channel resources for projects. Simple illustration is Tema motorway. Can we say if we channel pension resources to build the motorway, do it properly and toll it properly, private investment, that we can generate the returns, we can see the physical thing there. We are using it, we are benefiting from it, we are willing to pay for it. That is a good way to match long-term funds with long-term projects. Some of the interchanges we talk about, do we really need those interchanges? I don't think so. If we develop a proper mass transit system, you see that most of us who drove here, we won't be driving. So what is it that we are pushing money into government to do? No, we need to check ourselves, particularly those of us in leadership. Of course, those of you in leadership, not me any longer. You see, those are the real things. And I even ask myself, I used to have good friends in Lagos. So I hear the Nigerian story that Obasanjo calls Dangote, that I see a lot of cement being imported. Can't you do something about it? What help do you need? Then we can offer you. That is a Dangote story. Then I ask myself, okay, you said I serve on Casapreco board. I've asked the owner, Chief, has anybody called you to talk about the help you need so you can grow this business? He says no. That even the road in front of his factory was done by he himself. Meanwhile, they take tax from him. The earlier we start having the mindset that we must first give something to get what we are looking for in return, the better it will be for us. You will see that whilst we're talking about this debt exchange, our approach, the physical approach, to tax people the more. And I'm asking myself, who is in difficulty? Is it the government or the individual? What is the price of Coatem? Coatem that used to be about 34 cities is now 145 cities. How many people can afford that? So the way we think about the issues is very critical. Look, we need the investment. We need people to mobilize resources. That is true. But till we offer leadership with honesty and accountability, we will have challenges. And I'm challenging everybody who finds himself in leadership to say that if somebody brings me one city, I want to preserve it with interest. And it's about, look, I'll give you illustration of the person who raised me up. Very early age, trustworthy, illiterate woman. The people will bring money to her for safekeeping. And he will call you. He said, Daniel, Winston brought this money. Check it. Go and put it here and make sure nobody takes it. What he's trying to do is you can't steal it yourself. And when somebody else comes, can you give me change? She says no. Winston brought the money in this denomination. When he comes, we must give it to him. And that is what we should be doing. Why are we worried about investment? People would invest. People are looking for returns. And I keep saying the bigger issue is the inflation. How would we tackle our inflation? I would dare say that government should look at taxation. If you look at the way we structure our economy, we base everything on taxation. Why is it difficult to solve the transportation problem? Why is it that we can't do the mass transit? Do you know why? It won't be done by politicians. It won't. Why? Because if you bring the car, they will take duty. If you buy the fuel, loaded with tax.
Okay.
So they get a benefit. If you use that tax to do production, you can't be competitive on the world market because your competitor elsewhere is not paying those things. So you need to waive off that. We should be telling ourselves that we want to expand businesses to create first employment. Now, when people are employed and paid well, they have bread on the table, roof overhead, kids go to school, you will get them in the consumption tax. That is how you grow these things. So let's look at the entities that are productive, not the ones who get government patronage, no. Those people who do their own work and sell to the ordinary person, take out the taxes, encourage them to grow, employ a lot more people. Don't let us put government as the engine of growth. Government itself knows that they are not the engine of growth. I ask myself, I look at MTN numbers. How come MTN is making so much? As at the end of the year, their equity is a little over 5 billion, but net profit is over 2 billion. I say, wow, what is it that they are doing right? And our own entity that we have is not able to do that. Do we know? We're saying, let's look at the banking sector.
Okay.
There are issues there, and we need to be honest with ourselves. And we need to look harder at the numbers. Now, the banks are doing something that is quite interesting. Their own equity holding is very small. The chunk of the money they use is depositors' money.
Sure.
The chunk of the money they put in government bonds is depositors' money. But how much of that do they share with the depositor?
Tell me.
The depositor doesn't benefit from the risk they assume. They get all the rewards. And today the banks are in difficulty, and they're still looking for depositors' money. And I'm saying till we start treating people well, my essence is on trust. Trust comes from building relationship. So till we start building relationship with investors and depositors, we would all go in circles and run into difficulty.
Okay, yes, Reverend. You talked about what the regulators must do, so I'm sure you tackle it from that angle too.
So, Winston, I just wanted to touch on one of the points that Dr. Sedon made with regard to pension funds, because I just wanted to agree that pension funds are very critical. If you take countries like Chile, Malaysia, the impact of pension funds investing in the real economy is very clear. Now, NPRA, that's a regulator for pensions, has investment guidelines. And I recall some years ago, some of us, when I was on the other side, some of us were asking for the allocation made for investment in equities to be increased. And you know the feedback I was given, the rep at NPRA said, look, this 5% that already is, that you're asking for an increase, even that amount is not being utilized by the pension trustees. They would rather park the money in government paper. Okay, so there's also that element of, if you like, the managers of, I mean, the regulator will come up with a structure. Again, I know that the NPRA has revised the investment guidelines and has made allocation for what they call alternative investment, which is basically opening the options. So while there's there's a bid for government paper and the other traditional investment or asset classes, they have also introduced alternative investment. The question is, will the market or the market operators, will they take it up? Because the regulator can create the framework, but it would take the the market operators to take it up and then run with it. So I think we need to stress the fact that investments must continue. Investment in pensions is a critical one because of the sheer numbers, and it can make a significant impact when it comes to the macroeconomic environment. So, the regulator will play their role, and, the market operators must also do same. If I speak for the SEC, there are a number of things that we have introduced post the cleanup just to boost investor confidence, because having a strong regulator is important. There are a number of guidelines, for instance, that we have introduced to, if you like, check the behavior of the market operators. For instance, I can talk about the conduct of business guidelines that we issue to ensure that there's a way in which the market operators behave, the way they organize their corporate governance. We have introduced investment guidelines, which basically gives guidance. And let me say that when I talk about guidelines, it has the force of law. It's not a suggestion. Okay. You need to go by it. But it will let you know that when it comes to related party transactions, which sometimes is a problem. And indeed, if you go back to the crisis, it's part of the issues that we have provisions. So the regulator will continue to look at the regulatory architecture, strengthen the supervision, and just make sure that people are staying on the the straight and narrow path. So I believe that regulators, as we continue to engage, at least from where I sit, I can see a lot of engagement and basically making sure that we put in place, we strengthen the structures of supervision to elicit the kind of confidence from the market. We are, for instance, looking at creating the Investor Protection Fund. With the banking sector, they have the deposit insurance. In the capital market, we have the Fidelity Fund, but that's really for the stock exchange. But we are looking at a broader fund to provide some kind of a safety net. When you talk about safety net, it goes with the issue of moral hazard, because if people know that there's a safety net, then they can be a bit reckless or take excessive risk.
Exactly.
But basically, we're looking at how to strengthen the regulatory architecture to give or elicit more confidence.
Yes. Before we get to all those gathered here, so anybody who has a question could ask. Yes, Dr. Sada, you want to make a point?
My reaction has to do with the regulators. Regulators are also required to develop the market. So you are raking in a lot of money through pensions. You should be thinking of where those monies will be channeled into. So what should be complementing the pension activity is the development of the capital market and identifying projects into which you direct the pension funds to go. If we don't do that, what they will do is give it to what I call Mr. Government. And that is where I think seriously we are not pulling our weight.
Great. Before we take all the questions, Professor Texan, it's important we look at how we can build a resilient economy, macroeconomy. We've talked about the fact that it impacts our investments and all. Briefly, what must be done?
Well, to build a resilient economy, we need to first look at our fiscals. We need to ensure that we rationalize expenditure so that we don't have a situation where we are always running huge fiscal deficits. To build the resilience that would help, when the IMF left in 2019,
okay,
if you look at the period that they were with us from 2016 thereabout to 2019, we have started building the resilience that we were aspiring to get to. Inflation was getting to very low levels. At one point, our fiscal deficit was 3.8, 4.7. So we are moving on the path of building a resilience that was going to withstand shocks if they came from the external sector. So when I hear politicians say, oh, COVID dealt a blow, to some extent that is true. It just shook our resilience because we have not built up the resilience yet when COVID came in. But one way in which we can build a resilient economy, I've heard Dr. Sedo say that over and over, that we need to bring inflation down, and that is important. I know the central bank has made enough moves to try to contain inflation. It looks like we are getting to a point where inflation is going to decline as we move on. But we also need, as much as possible, to ensure that we do not go onto the market with those huge rates to borrow money to finance consumption.
Okay.
I mean, we've said it over and over that this is the time Ghana has to have a conversation on whether we will need 230 members of parliament. Do we need that number? Shouldn't we look at having a discussion if we reduce the size of parliament and all that goes with it, the expenditure that goes with it? Do we always need a voters register in a year that we are going to have an election? If we invested in a Ghana card, can't it be enough for us to move ahead? Do we always have to pursue some of these subsidies that are highly inefficient? I mean, if you take the free SHS, for instance, I've said it over the years that I think that is a good concept. The financing is bad. I mean, do we have to subsidize parents who can pay for? And in any case, I mean, my wife just went to secondary school. It cost me well over 5,000 to even get the student there without paying any fee. I mean, really? Couldn't that money have been used to pay fees for the schools to provide for the kids, so that the government will look at using whatever savings it makes out of the free SHS to prioritize other sector by giving the business community the right environment? Dr. Sedo said it. I mean, we should take some industries that are showing promise and support them. Give them all the support they need to be able to generate enough foreign resources for us. I mean, Kasapreko, for instance, medicament is one of the things that Ghana has comparative advantage in. And they do a lot of that as well as other companies. What support are you giving them to be able to take advantage of the African free trade area, to be able to produce and export to these countries so that we can rake in some forex? I mean, and like you said, to be truthful, none of our businessmen will tell you that government has ever approached them. That is support. Even when interventions like Exim Bank and Co have been set up, those who get the resources are party cronies of government. You go there to take the resources, and some of them do not even own any viable business. So we need to get things right. We need to make institutions work so that Ghana will be on the path. We can do it. We have the men, we have the women, we have the industries that we can help us develop. We shouldn't be using fiscal populism and politics to destroy the economy. We need to fashion our own political dispensation that will rely less on spending out of our budget to support that, so that we can, if it's possible, even to have a discussion of changing the number of years that a government will be in, maybe to 7 years, one term. You are giving 7 years to have enough time to do whatever you have to do. Okay. Afterwards, you move on, so that we don't have to be having elections with the huge cost outlays every 4 years.
Thank you very much, Professor Ibo Texan. Thank you very much, Reverend Daniel Ogbami Tete, and thank you very much, Dr. Daniel Sedo. But please stay with me because it's time for questions and contributions. So please, if you have any question or contribution, just show by hand. I'll get a microphone to you. The team is around. We'll get a microphone to you, and then you can ask your questions. Okay, so I see some hands over there. We'll pick the first two from there, and then we'll come here and there, and I think we could be done. Oh, I see a lot more hands. Okay, let's see how it goes. We have just about 25 minutes to wrap it up. But let's hope that the questions will be very brief so we can move on. Yes, let's start from there. You tell us your name, where you're coming from, then we'll pick it from there.
My name is Albert Lutrot. I'm a pensioner. But I work with the Bestwell Group Company Limited. I want to know, we learned that pension funds have been exempted from the debt exchange. Now, as a pensioner, my little money that I earned from leaving work, I invested, just like our panelists said, I tried to diversify by putting parts in treasury bills, bought some M fund, and then the rest in B fund. Now I'm left with nothing. The treasury bills rates are so bad now, and my B fund and M fund, to understand haircuts, have affected them. Please, can you explain to me what my situation is? Because I'm a bit confused. Thank you.
Thank you very much. Yes, let's get to the next question.
Good morning.
Good morning.
I'm Dr. Eyim Dake, the AGI president. And I take it from Dr. Sedo. Thank you, Dr. Sedo. And that which he captured that made my morning, I took a coffee for that, using the role of the regulator to stabilize markets and create opportunities. And I give two clear examples. With the regulator, i.e. government, we're not asking all the time for funds, but upholding quality standards, upholding standards and quality makes all the difference to some industries. Furthermore, a clear example can be what is currently happening in the deregulated market of the downstream. The role of the regulator to manage that space, because we all know the extent to which the inflation indicators are being driven by the fuels. And therefore, if we could have the regulator stabilizing markets and creating opportunities, it makes a lot of difference in a least developing economy. Least developing economy has its characteristics, and therefore we need to emphasize on the role of the regulator. My other question is this, that was a contribution. The confidence level of most investors today in Ghana has been shattered. And I'm looking for 3 points from the panelists. I never heard anything about sanctions. From the days of the financial reforms to the DDE, we haven't seen any sanctions or clear sanction, naming and shaming of participants in this space. It makes a lot of difference to bring back our confidence. Thank you.
Thank you very much, Dr. Eyim Dake. Let's get to the next question. Yes. Please tell us your name. Yes.
My name is Eric Amponsa Boatin.
Okay.
I have a question each for all the three of them. The first one goes to the professor. I just want to find out from him, since independence, all the budgets that we've had have always been deficit budgets. And so what it means is that every time your expenditure is more than the revenue. So that means that every time you are into what? Debt. So I want to find out from him, which other ways, apart from us able to raise the revenue internally, which means that then we have to introduce more taxes. Which other ways, apart from that, can we as a nation ensure that we don't go out there and borrow money to be able to support the budget? And then to my classmate at Fansipil, I call him DOT. Yes, as a regulator, I just want to find out from you. You've been around for quite some time. And so anytime that I hear that a company has gone bankrupt, especially those that are into investments and bonds and all that. So the question is that, as a regulator, what measures did you put in place? Because I believe that if you had done the right thing, those companies shouldn't have gotten to where they got to. And then finally, Dr. Sedo, yes, we all need to make informed decisions. And I believe that there has to be full disclosure and transparency, so that if I want to invest, okay, I know that if I do ABCD, these are the likely outcomes. Thank you.
Thank you.
Hello.
Yes.
Thank you. I'm Joseph for being president of GUTA. We are from the informal sector. And we were in the dark days during the revolution time when our monies were confiscated. I hope you all know. And people started putting their monies under the bed. It took government effort so many years in the early 80s to bring back hope into culture of savings. I hope you all know. And now, improper planning, mismanagement of our investment, bad policies is taking us back to those old days. We have to do something about it. We traders also diversify. We say we do excessive importation. Yes, because that's what we can better our lot. But still, we put some of our profit into investment, like savings in the bonds and treasury bills and all that. If it should become like it is now, then of course, we do not have any option than to do over trading, go back to our trading, and it doesn't help. Let's try and manage these systems very well to whip back confidence into the banking system and savings at large. Thank you.
Thank you very much. I think we can pick a final one. Yes.
Okay. I think I'll ask the final question, and it goes to the regulator. My name is Sam Ankra. I mean, it's well established that the regulator plays a very, very crucial role in building the financial markets. How is a regulator regulating their advisors? You just made a statement where you were being harassed to make an investment. What is the role of the regulator here? What is their function? Are they regulating the advisors? And if they are regulating the advisors, in what way? In UK, for instance, you can hold a PhD in economics, but you are not a financial advisor until you pass the FSA's exams. Although you'll be exempted from certain subjects, but the ethics and the practice of the professional is so crucial. So what is a regulator doing about it?
Great. Yes, I think we can take the last one. Yes, please go ahead.
My name is Joseph Echampo. I'm a lawyer. From the discussions and from what is going on, we realize that I think we've come to this stage because of government revenues not matching expenditure. And we believe that this has come about because of the programs that the government is implementing, which has put our economy into jeopardy. So what I'm advocating is that there should be an Electoral Accountability Act, which means that all political party manifestos on promises which may not be financially feasible may be subjected to approval by a body. And if it's not feasible to be implemented and it is found out that it will negatively impact our budget and our finances, it should not be approved. So that's my suggestion.
Okay.
Pardon me if it's too weird.
Okay, I think we can take the final one now. Yes.
Yeah, Edwin Anyanchi, former Director General of SEC. I have issues about building public confidence in this our market. The financial markets have only one asset, most important asset, is public confidence. Without public confidence, there is no financial market. The public confidence is what makes you take your money to somebody and still go home and sleep without thinking, because you know that when you need your money, you will get it. Public confidence. And that is why in the objects of financial services regulation, one of the three objects is the protection of consumer of financial services. Protection. The SEC people will say investor protection. If you don't protect investors, you won't get any confidence in the market. When this DDEP issue came, I did not see any regulator performing an investor protection role. The government is an issuer of securities, and people who are holding government securities must be protected. The fact that government securities will not go through regulations for approval before issuance does not mean people who are holding that document should not be protected. How come investors were told that I will not give you any interest whatsoever for 1 year? And regulators thought that they have no role to protect that investor. Regulators must protect investors. Look at what is happening at the other side of financial services, the savings and loans and the financial houses. For some 3 years, people cannot assess their investment with some of these institutions. And the Bank of Ghana is looking at it. They don't care. It's like it's not their business. You put your money there. You put your money at a government-regulated financial services institution, and you can't assess this, and nobody is looking at how do we get these investors' funds back to them. Investor protection. I am told Bank of Ghana says they cannot, under the Banking Act, the SGI Bank, they cannot provide liquidity support. Who drew up that law? Is it not the Bank of Ghana who brought that law? And you make sure you cannot give liquidity to support these people, for them to give back our monies to us, for this money to go back into circulation for small businesses and private people who are doing their work. Investor protection. If we can't do that, then we should forget about this market. We can't bring back any public confidence when the regulators are sitting down and they don't want to act. I expect Bank of Ghana to act immediately to save all those institutions that are keeping people's money and they can't have access to the money. So who should they go? Whom should they go? If you are in my village and your money is locked up, where do you go? Bank of Ghana and other regulators, you must protect investors. Otherwise, there will be no public confidence and there will be no financial market. Thank you.
Thank you very much, Dr. Eduana Nyintri. So we'll get the panelists to address these questions, and then we'll take the chairperson's closing remarks, and then we'll wrap it up. Yes. Maybe I start with you, Reverend Obami Tete. Yes. Okay, if the microphone is not working, okay, well, they're bringing us microphones. Yes.
Yeah, thank you very much. So I'll touch on a number of the questions relating to
yes,
the
briefly,
regulator.
because of our time, briefly.
For instance, Dr. Samankra asked about how we are regulating advisors, whether we are, and the answer is yes, we are. We license the investment advisors, we license reps of the various companies, the fund managers, the broker dealers. So without the license, you can't perform. We do mystery shopping from time to time to pick out if there are any that are performing the role of investment advisor without the requisite license. But in addition, we are introducing the continuous professional development program, which will require that because you may have the license, but we need to keep you on the cutting edge, and it's how we keep you informed or trained or educated. So that is being introduced this year, so that on a continuing basis, those who hold the valid license, they upgrade or update their knowledge and their practices. And then my predecessor, Dr. Eduana Nyintri, talked about regulators and investor protection. My comment or response is that investor protection comes in different forms. Okay, so for instance, because sometimes people tend to look at just one aspect, and it's not everything that you may even get out in the public domain. Okay, so for instance, if the regulator is advising maybe the sector ministry, it may not be something that may come out. But apart from that, if we take licensing, it's one of the ways you protect, to make sure that those who come into the space to operate are fit and proper. It's a way by which you do that protection. You can talk about the information, making information accessible, to the investors. Then you can talk about the actions that the regulator will take, for instance, to suspend or to revoke. So investor protection is a wide continuum, and I think that the regulators are keeping up on their mandate to achieve investor protection. Then Eric asked about what measures we are putting in place to avoid companies failing. And what regulators do is to maintain the monitor, we supervise. We track, we do both on-site, off-site inspection to keep an eye on how the market operators are performing. Now, sometimes there's what we call regulatory forbearance, in the sense that when, let's say, a market operator may be having issues, you don't immediately go in to pull the plug, as in to revoke the license. You may allow for some time for the market regulator for the market operator to correct that, and that may appear as if the regulator is not acting, but it's not always that you go in, because there may be problem you want to allow for that. And let me say that, we recently heard of, like Silicon Valley Bank, Credit Suisse. No matter how tight the regulatory framework is, it will not prevent companies from failing. The question is, what resolution framework do you have when that happens, for you to ensure that investors, depositors, etc., are protected? And then on the issue of market development is very much on the radar of regulators. We have in 2021 we launched a capital market master plan, which is a 10-year plan providing a blueprint to develop the market. And one key area is development of products, to widen the diversity of investment products. And there are a number of, things in the pipeline. You'll be hearing of some REITs coming to the market. I know we have approved one, and a few more are coming through. So the issue of market development is still very much on our radar, and if you ask me, it's one of the ways you also engender confidence, because then you create opportunities for people to deploy their savings. And then Mr. Lutrot, who is a pensioner, he made a comment about a haircut on his investment in collective investment schemes, and my response is that there is no haircut. This is where the mark-to-market, concept comes in. And Winston, I've been on your show and I've explained that the mark-to-market concept is not new. It's always been something that it's done. The only issue is that for fixed income funds, traditionally, if they collect equity collective investment schemes, they already mark to market, because they take the price on the Ghana Stock Exchange to value the assets of the scheme. Now, a lot of fixed income funds were not doing that. They were using the amortization or hold to maturity approach. Okay, and given what was happening in the economy last year, with interest rates going up, and then by the principle of the inverse relationship between bond prices and interest rates, bond prices were going down. So fixed income funds that were holding bonds were basically facing a situation where the value of the bonds, were going down. So if they went out to the market to sell, they would get a lower value. And so we had to force them to apply the mark-to-market for fixed income funds. So it's not a haircut issue. It's a question of what is the value of the securities the fund has invested in if they go to the market to buy today. And that's really what people are seeing in terms of a reduction in their investment in the fixed income funds. So mark-to-market is not a new concept.
Right. So before we bring you in, Professor Ebutas, let me just say that we're going off Joy News and Joy FM now, but we'll just continue the conversation in here. So yes, Professor Texan.
Okay. I just have one question thrown at me. I think that the fact that we've run huge deficits over the years since independence doesn't mean we can't do anything about it. As we speak, the African Center for Economic Transformation has been discussing the Ghana We Want framework. One of the main pillars of that is fiscal policy, how to build a resilience and to ensure that we do things right. And part of the discussions that we've had with the other stakeholders is the fact that we should not only concentrate on mobilizing revenue, but we should look at the expenditure side. We should also look at a situation where we concentrate on high growth sectors and give them the necessary support for them to grow our economy. And it's because we have not invested in capital expenditure over the years. Because after the three main expenditure items, compensation, debt service, and earmark funds have been paid for, that is 144% of our revenue. There's nothing left for us to invest in. So it means that we need to take a look at how to cut down on the compensation to employees. And one of the ways we can do that is to reduce the size of government, also to wean off certain state-owned enterprises from government payroll. Some of them can run on their own budgets. And so we need to wean off. If you take universities, for instance, is it not possible for the government to allow the public universities to charge not too realistic, but maybe 60% of what a realistic tertiary education fee is, so that the universities can even use that to pay lecturers, so that lecturers will wean off the public sector wage bill, all of that. So yes, the deficits will be there. We are looking at reducing them to very low levels so that we don't borrow to pay for that. Then also to Dr. Obin, you guys should go on and invest. Don't overtrade. I mean, we need investment. And in fact, your resources when you invest will allow domestic firms to produce some of the goods that you are importing, and you don't need to import them. So go on and invest your resources in Ghana. Believe in Ghana, and definitely if we do it right, we should be able to make a headway in development. Thank you.
Great. Finally, Dr. Sedo.
Okay, thank you very much. I would pick it from where my good friend Dr. Adwanani left, and where Reverend also tried to react. Indeed, when you are speaking from the customer's perspective, the regulators really do not protect customers. And the regulators need to be told in the face, they need to up their games. Because it's the customers that come with the money that is invested. And it's not government that should be protected. Government is too big. So if you go on the side of government, you create more problem. I'll illustrate what Dr. Duanani said with a circular that came from the central bank. They say the old bonds, they will not admit it for capital adequacy computation. That creates problem. Who issued the old bond and who issued the new bond? It's the same government of Ghana. So what is it that you're trying to do? So look, we need to get a regulator to appreciate the fact that they need the investors, so they should work with the investors rather than the government. Then number two, the major problem we have as a people is we've structured ourselves believing that it's government that can look after all of us. We are deceiving ourselves. Government can't look after all of us. They will look after themselves before thinking about us. So we need to realign and say, if we are mobilizing money for investment, it should be productive things, not necessarily challenging through government. And that is where I will come back, that look, we need to develop the capital market properly. Now, another challenge we have with regulation is our inability to regulate conduct. Now, the regulators will tell you they can't regulate character, but at least we can regulate conduct. We know people have misbehaved, but they are walking on the streets and they are still very loud. People have lost their monies. We are doing nothing about them. If you take what has happened to the US, they came out to say that they won't use taxpayers' money to resolve the issue. It tells you that they build safety nets But where is our safety net? Personally, I have money with one of these institutions that still carries the license of Bank of Ghana. I can't access the money. Nobody is telling me anything. I mean, where is the confidence? So we are doing many things wrong. In as much as we try to encourage investment, look, we should tell the powers that be that they should start doing the right thing to encourage us to get into the investment space and do the proper investment. Above all, let us work to drop the inflation. If you tell Dr. Bing to invest and he's getting returns lower than what he gets when he's doing his trading, I mean, he's a rational being. What he would do is to overtrade, not to give money to government and to be told that whether we call it haircut or whatever it is, that's a loss to him. And that is his pension being taken away from him. So we should resolve to do what is right, and that will serve us well.
Thank you very, very much, Dr. Daniel Sedo. And thank you also, Professor Ebot Texan, and thank you very much, Reverend Daniel Ugbami Tete, for joining us to have this conversation on domestic debt exchange, lessons and implications for how you invest. I'm sure all of us have learned something. We now would invite the chairperson, Abna Amwa, for her closing remarks. Let's welcome her with a round of applause.
I think everyone deserves a big round of applause again. It's definitely been a very engaging morning, and we all agree investor confidence is shaken, it's eroded. But there are ways we can build back better. The macroeconomic environment is a big thing for all of us. Reverend set off that tone well, supported by Professor Texan. Government must rationalize and prioritize expenditure. There are just too many pet projects that we don't have funding for, that we embark on, and leave too many white elephants hanging. We must bring inflation down. Every panelist talked about that, as well as participants here. And interest rates must come down. We cannot take expensive money to fund emoluments and pay back more debts. Under that macroeconomic discussion as well, we must look at industries that are showing promise and are productive, not giving favors to party faithfuls. And GOG must call entrepreneurs that can grow fast and strong and sustainable ways to support them. Then, of course, Professor Texan talked about our National Development Plan. We've had one, we've reviewed it, there's been no buy-in, there's been no sign-off. But the need to have that discussion and ensure that successive governments and every party that follows draws up a budget to support the implementation of that plan is important. The second big item takeaway for today is our regulators' role. The regulators are to supervise market operators, so the training, their conduct, their performance, to bring back investor confidence. They must protect investors. Cannot be just supporting government, but must be seen to protect investors. And one way of protecting investors is also holding those that are found culpable to account. Regulators must also develop businesses, create markets, look within local content, and create markets. We are talking about our pensions industry. Today, the private pensions have about 25 billion Ghana cedis of assets under management. How are regulators shaping the use of these long-term funds to develop our country? Professor Texan also talked about the Fiscal Council that has the power to bite and not just an advisory role to government. The third big takeaway for me theme is around financial and investment literacy. as I heard a lot of the questions going on and the contributions, I realized that our regulators, market operators, the media, we must all collaborate to ensure that we embed financial and investment literacy in our very fabric, I dare say from primary school, using cartoons, using every tool that we have to embed financial literacy and investment literacy. Of course, Dr. Sedo also puts the ambit on the individual to educate themselves. Information dissemination is an important tool that falls also under this, to make sure that there's enough information going out and people are skilled to take that information, interpret them, and act on them. Finally, I think we all agree that the ambit of developing our country falls on us and on our private sector, working hand in hand with our public institutions and governments. And therefore, we must go on investing. Whether we are investing in our own businesses, we are investing in other people's businesses, we cannot afford the risk of stopping. We cannot afford the risk of developing other countries and creating jobs in other economies. So all of us must come together, develop our capital markets. Private sector operators can access capital, government can access capital, and together we invest in the productive sectors of the economy. Thank you, Graphic Business. Thank you, Stanbic Bank. Thank you, panelists, and our moderator. Thank you, audience. Have a good day.
Thank you very much, Chairperson Abena Amwa, and thank you all for watching. We're still live on Joy News Channel, and thanks all of you for being present here. My name is Winston Amwa. I've been your moderator. Tomorrow on the Super Morning Show on Joy 99.7 FM, we'll continue the conversation. Have a lovely morning. Bye.
Live from the Labadi Beach Hotel, we brought to you the Graphic Business Stanbic Bank Breakfast Meeting. And for this quarter, the theme has been domestic debt exchange, lessons and implications for how you invest. Hopefully you enjoyed that conversation. We have